Hey, good afternoon, first-time homebuyers, friends alike. This is another topic that I'd like to share with you today. It's not really just for first-time homebuyers. It's really open to any home buyer. It has to do with FICO scores, otherwise known as your credit score. The credit score that is needed to determine your credit worthiness when applying for a mortgage. So this topic basically, if you look at my description, it's FICO score. How bad is bad? So let me give you a little background on FICO scores and determining the good, the bad, and the ugly. I'm going to go way back, 30 years ago, and actually FICO score, the computing of the score, maybe it's been around for 15 years. The formula, and we don't really know how the FICO score is determined. The industries kind of keep that away from, I think, lenders, vendors, and my opinion is that they just don't want us to learn how to, hack it. So we're not sure what all of the mechanisms are that can change the credit score. We know how to help raise it. We certainly know what will lower it, just from trial and error. And there are some tips and tricks out there, and I'm going to try to give you some on this video. But typically, you can see scores, and I'm not quite sure what the lowest score is. I believe it's in the 520 to 530 range, and it could be lower. In my experience, those are some of the scores that I've seen, some of the lower scores that I've seen. I've seen scores as high as 820. I'm not sure how much higher the score can actually go. There's two different levels of scoring. There's a retail score platform for credit cards, buying an automobile, retail type of credit accounts, and then there's a model that's used mainly for mortgages. The FICO score for a mortgage typically has a different model that's used in determining the FICO score than it might be when you're, again, applying for a car loan. So as an example, I've had situations where people have bought a car and they've gotten a credit score of, let's say, 710. Or they've gone on to Credit Karma or some of these other credit scoring models that you might have on a cell phone, and they can look and see where their credit score is appearing to be on that particular platform. Even some people have Equifax. You can have access to your credit scores on your phone. If you want to block a particular vendor from pulling your credit or viewing your credit. So some of these are available right on your own cell phone. And I've had many instances where, even sitting with a person, they've pulled up their Equifax account. They've shown me, look, 706, and yet I pulled their credit report for applying for a mortgage, and it might be 680. 690. It's not always as high as some of the scoring models that the consumer has. So that requires us to sit down and kind of go over the why. Why is that happening? Sometimes they feel as though my inquiry lowered the score, and that's not the case. So how bad is bad? Let me at least tell you where, as a lender, as a bank, where typically I can offer financing. 620 is a score that I think can get you some decent financing, typically an FHA loan, a government loan. You may be able to go lower than 620, but when you start getting into scores below 620, the parameters of the financing change. They could require more compensating factors. They could require more money down. The interest rate certainly can be impacted. So we try to get our customers to a 680 score. 640, again, anything over 620, typically you can find financing. Not the best. 640, a little better. There are matrices that determine where an interest rate could be or would be based on credit score. Mortgage insurance, that's tricky. A lot of people don't think of the PMI when they're thinking about interest rate, and that impacts your payment. So, for example, a lower credit score can have a higher PMI rate, and that mortgage insurance, that factor, if it's 0.82, you can take that 0.82 and add it to your interest rate, and that would be really your combined rate. So even though you're thinking you're getting, and these are just examples, you're thinking that you're getting a 7% interest rate, but if the PMI factor is 0.82, you're getting a 7.82 interest rate, combined, the payment. So those are things you have to think about. What I would ask you do is, if you're serious about buying, you've heard people saying, well, is this a hard pull or a soft pull? I'm going to tell you that I think that you should get a hard pull. The soft pulls can be inaccurate. They may not show everything that a hard pull could show. So you got to be very careful if a lender says it's a soft pull. Something could pop up that even though they pre-qualified you based on a soft pull, something could come up on the hard pull that didn't show, and that could change your qualifying. So you have to be careful there. The hard pull, does it impact your score? Not enough to impact your qualifying. Now if you've gone out and you've got 10, 15 inquiries, 3 mortgage companies, a couple of credit card inquiries, all within a 30-day window, yes, that can impact your score. But if you are serious about buying a home and you're not out there at the same time trying to buy a car or trying to get a credit card, that one inquiry from your lender, even if it's a hard inquiry, should not have any impact on your score. At least I have not seen that to be the case. So what's good, what's bad? As I mentioned, low to mid 600s, yeah, you could find financing. I would prefer to have my clients get to that 640 mark. Would love to have a 680 in play. That opens up conventional financing. It opens up FHA financing. Now, even at 680, the conventional financing, because of that matrix, that rate may not be as good as, for instance, an FHA loan, that government loan, which doesn't really have the same scoring matrix. Now, anything above 700, now you can start looking at some conventional products. But again, that's what we do here. That's what I do. We would break it down. We would show you the score. We would show you those matrices so you can get an idea of what the difference is. And then last but not least, I have a product that's called a Credit Expert. Really all that does is we take that hard hit credit report, the hard pull, and we send it to the vendor. The vendor looks at it and they determine how many points can be raised. So let's say you've got a 630. It'll let us know, can we get an extra 20 points? Can we get an extra 30 points? How many points can we get to raise the score? And then what do we need to do? And they may tell us, lower the balance on this particular credit card. If you've got a high credit limit of $5,000 and you've got $4,000 on it, bring it down to 50% of that high credit limit. That typically does the trick. So you bring it down to below 2,500, that could help the score. Certainly we don't want any late payments in the last 12 months. 6 months could possibly help you out, but we certainly don't want late payments in the last 12 months. Collections could be a problem. They've lightened up a little bit on medical collections. So if you have a hospital bill that went into collection, some agencies will kind of look past that. But collections from just not paying a bill, certainly a collection from an apartment complex, if you've had some late rent payments, could be a problem. Judgments could be a problem. Bankruptcies, there's a workaround, but that could be a short-term problem. And again, some mortgage programs are a little bit more lenient than others, and I would have that conversation with you when that comes up. But credit's important. Everything is FICO score driven these days, whether it's a mortgage, whether it's your car loan, whether it's a Visa card or a MasterCard. That credit score, you've got to protect it, and you've got to pay attention to it, and you've got to fix it. And that's what I would be happy to do. If you want to send me a comment or or subscribe so you can get more information on little tips and tricks. But I've hoped that this has helped you. Don't get discouraged. There are ways to improve credit, and we'd be happy to show you how. So that's it. It's John Milano signing out. Have yourself a great day. Thanks.